So, is the home remodeling boom over? Or is it just shifting gears? The latest numbers from the housing market are telling a really fascinating story about homeowner confidence. And it all boils down to one key number.
And that number is 62. Now, this is the latest reading from what's called the Remodeling Market Index, or RMI for short. And yeah, it might just look like a number on a screen, but trust me, it's this incredibly powerful indicator of confidence for the entire home improvement industry.
Okay, so what is this number really telling us about the health of the housing market? Well, it turns out it actually reveals this huge shift in how millions and millions of us are thinking about our homes.
And this quote here from Elliot Pike, he's the chair of the NAHB Remodelers Council, it just perfectly captures the vibe right now. He's saying, look, even though that headline number dipped a little, the sentiment is still generally positive. The real key here is that remodelers are busy. They're just having a lot more conversations about budgets with their clients because, costs.
All right, so to really get the story behind that score of 62, we've got to pop the hood, right? We need to see what this thing is actually made of. So let's break down how this remodeling market index works.
Okay, so the RMI is pretty simple. It's a scale from 0 to 100. And the magic number you need to remember is 50. Anything, and I mean anything, above 50 means more remodelers think the market is good than poor. So when you see a score like 62, that's not just positive, that is solidly optimistic.
So this RMI score is actually an average of two different things. The first part is the current conditions index, and that is sitting at a very strong 70. Now, if you look at the breakdown here, you see large and moderate projects are holding really strong. But check this out. The real story is with the small projects, the ones under 20 grand. Their score actually went up to 74. That tells you there's some serious, broad strength in this market.
And then the second part of the equation is the Future Indicators Index. This is the one that looks ahead, right? It's tracking things like new leads, job backlogs, that kind of stuff. It came in at 54. So yeah, it's down a couple of points, but it is still comfortably above that magic number of 50. And that means remodelers are expecting to stay busy.
Okay, so we've established that remodelers are feeling pretty good about business. But the big question is, why, right? What's going on in the economy that's driving all this confidence? Well, it all boils down to this really powerful trend. Let's call it the stay and improve economy. And here's the why in a nutshell, straight from the NAHB's chief economist. He points to two massive factors. First, our houses are just plain getting older. And second, you've got this lock-in effect from mortgage rates. Think about it. If you have a super low rate, you are not going to want to sell your house and get a new mortgage at a much higher rate. So what do? If you can't move, you improve. It's that simple. And this chart, it just drives that first point right home. Look at this. The average age of a U.S. house has jumped by a full decade in just 17 years. And it's common sense, right? A 41-year-old house just needs more love than a 31-year-old one. We're talking new roofs, kitchens that aren't from the last century, more efficient systems, you name it. All of that creates this constant, built-in demand for remodeling.
So just to recap, you've got three main pillars holding up this home market. Number one, the mortgage rate lock-in. Number two, that aging housing stock we just talked about. And number three, high home equity. And that's just a fancy way of saying that because home values have gone up so much, people actually have the financial firepower to pay for all these renovations. Okay, so to get the full picture here, let's zoom out for a second. How does all this optimism in the remodeling world stack up against, say, the mood among new home builders? Well, let me tell you, it is a tale of two very different markets. And wow, this comparison is just stark. On one side, you've got remodelers feeling good with their positive score of 62. And on the other side, home builders. Their index is way down in negative territory at just 38. So, bottom line, remodelers are optimistic about fixing up old homes, while builders are pretty pessimistic about starting new ones.
So that's interesting. Within this positive remodeling market, where's the growth really coming from? Well, other industry experts are all pointing to one specific area. They're predicting that the main engine for growth this year is going to be luxury projects. That suggests the high end of the market is especially active right now.
Okay, so we've crunched the numbers, we've heard from the experts, but let's bring it all back home. Literally, what does all of this actually mean for you, the person who actually lives in the house? This is the real homeowner takeaway.
And this chart right here, This is pretty much the smoking gun for that whole stay and improve economy idea. A massive 75% of all remodeling projects were for people improving the home they plan to live in for the long haul. And look at this. Only a tiny 4% were to fix up a house to sell it. It couldn't be clearer. People are investing right where they live.
So let's wrap this whole thing up. What are the three big takeaways? First, the remodeling market is healthy. Confidence is strong. Second, the main driver is us, homeowners, choosing to stay and improve instead of moving. And third, remember this isn't just a feeling. It's powered by real, concrete economic forces. Our homes are getting older, we have more equity, and that mortgage lock-in effect is a very real thing.
And all of this leads to one final, really interesting question, doesn't it? With so many of us staying put and constantly investing in our homes, updating them, adapting them to our needs, is the whole idea of a forever home kind of becoming a forever project? It's definitely something to think about.